Hi everyone, welcome to week 2 of Personal Finance Online. Today we're going to look at an insurance overview, and specifically we're going to take a look at what are the requirements and consequences of having just the bare minimum of insurance coverage on a vehicle. So we're going to look at minimum liability insurance requirements in Washington State, what they are. And then we're going to look at consequences for driving without insurance. And those are pretty steep as well. And then we're going to take a look at an accident scenario, and we'll keep revisiting this scenario over time so we can kind of see how adding different coverages will affect the outcome of what the person has to pay and what the insurance company will have to pay. Remember, insurance is a way to help you through difficult times in your life, expensive times in your life. So say you get into a massive car accident and there's tens of thousands of dollars of bills that have to get paid. Well, the insurance company is going to come in, and if you have a policy, they're going to pay some of those bills for you and ease it up. It's why you pay those premiums every month, so that if something does happen, they're there for you, kind of a thing. So, excuse me. So let's get started. Minimal liability insurance in Washington State. So what is liability insurance? Excuse me again. Liability insurance covers damages and injuries to other people's property when you cause an accident. So if you crash into somebody and it's your fault the accident happened, liability insurance doesn't cover your costs. Your costs are left to you. It covers the other person's costs. The reason states require liability insurance is because it feels very unfair that if you, like say my car is parked on the side of the road and you drive along, lose control of your car, do something irresponsible and slam into my car. Well, without liability insurance, I would just have to try and sue you to get the money back that you caused of damage. With liability insurance, that means the insurance company is going to kick in money right away to pay for my car for something that you did. Okay? The key here is that it does not cover you or your property. Liability insurance is about paying for the other person's stuff when you cause an accident. Okay? In Washington State, you are required to have 2 types of liability insurance. And the first one is called bodily injury liability. So that pays for injuries and or death to other people in an accident that you cause. Again, you have to be found to be at fault for that accident before your insurance company will pay this for you. You get a max of $25,000 per person with a max of 2 people that they pay for. Anything beyond 2 people, the insurance company will not help pay for. Okay. Anything beyond $25,000, the insurance company won't pay for. It's the max they'll go up to. The other type of liability insurance is called property damage liability. This is what pays for damage to other people's property. So you cause an accident. Again, you have to cause it. You have to be found at fault. You cause an accident. This will pay $10,000 of damage to their vehicle because of the accident, or you crash in someone's tree, or you lose control in a house or a business or something like that. It pays $10,000 in property damage at most. Anything beyond $10,000, again, that's yours to come up with. Insurance isn't here to solve it. It's just here to help. Okay. And the question is, why would you get minimum coverage? Well, minimum coverage is going to be the cheapest coverage out there. So that would be why people opt for it. It does leave you somewhat exposed. If you cause more than $10,000 in property damage, you're going to have to pay up that difference that the insurance doesn't pay for if you cause an accident. Ooh, that was the dog coughing that time. Excuse you, Nala. All right, consequences for not having auto insurance in Washington State. So if you don't have auto insurance and you are driving a vehicle, that's a problem, and you can get fined $550 for being in that situation. Also, if you don't have insurance and you cause an accident and you fail to pay for any resulting damages and injuries, then your license can be suspended, which means you're not even allowed to drive anymore. Okay. And the other big one is that if you don't have insurance and you do cause an accident, you are on the hook for all the money involved, and it can get expensive fast, especially with medical bills. Medical bills can extend for 3 years past the accident. So if somebody gets hurt and say they break a hip and now they have physical therapy for 10, 12, 13 months, and then they start having problems with it, all of that can just keep building on top of the accident for up to 3 years away. So it can get expensive pretty easily in a serious accident. All right, so the next thing we're going to take a look at is we're going to look at an actual accident, and we're going to see what is covered and what isn't. So we have Dave here. Our friend Dave has minimum liability coverage. So he's got $10,000 in property damage for the other person's vehicles and property. He's got $25,000 of bodily injury for other people, and he has up to 2 of those that the insurance company will help pay for. So let's see what happened to Dave. He crashed into an expensive new car, and the value of the car was determined to be $40,000 at the time of the accident. Okay, so expensive car. The other driver was injured and had medical bills totaling $30,000 for the driver, $6,000 for one of the passengers, and $5,000 for a second passenger. Okay. And then in the accident, Dave was also injured, and he had medical bills of $15,000 at the end of it. And his car was totaled, and his car was worth $2,000. So that's the value was determined. So let's take a look at what things are covered and uncovered. Again, the accident was Dave's fault. It was clearly Dave was at fault. And he has minimum liability insurance. All right, so let's go through this. Let me switch over to a pen real quick so we can see what's going on. And pointer options. There it is. Beautiful. Let's see how well this works. So let's deal with this $40,000 first. So the question we have to ask ourselves is, hey, first of all, Dave was at fault, so his liability insurance is going to cover the cost of the other person's stuff. Part of it, at least. So he has $10,000 in property damage. There was $40,000 in damage. So Dave's insurance company says, hey, sure, we're kicking in, man. We're going to send them a check for $10K. Perfect. And the uncovered amount is still, though, $30,000. Okay, so that's Dave has to come up with that money there. Now, for the injuries, Dave has minimum bodily liability insurance of $25,000 per person for up to 2 people. So he's going to use that first $25,000 on this medical bill right here. So the insurance is going to say, hey, look, we're going to pay this person's medical bills for $25,000. Terrific. But that still leaves $5,000 of medical bills that Dave has to come up with. And then next is the second passenger of $6,000. Now remember, Dave can have 2 people his insurance company will cover up to $25,000 each. So the insurance says, hey, you know what? We got that. We got your back, my friend. We're going to pay the full $6K. Don't worry about it. And then there's 0 left uncovered. That person's injuries were totally covered by insurance. Now, this last person had medical bills of $5,000. Here's the catch with this one, though, is Dave has no coverage for a third person. So we have to come over here and say, okay, so covered is 0 for that third person. Uncovered is $5,000. Now, Dave could have bought more coverage, which would extend to cover more people at higher limits. But that would have made his monthly premiums for his insurance higher, and he opted to have a lower premium, right? So they're only on the hook for some of it. Now, because Dave only has liability insurance, his insurance only pays for the other people's stuff and injuries. So Dave's $15,000 of medical bills is uncovered. His insurance says we do not get involved. You chose inexpensive insurance. And Dave's car, again, not covered. $2,000, $0,000 in. That looks like it says okay. That's 0,000. So that's maybe I just need to say 0. That's probably a better way of doing that instead of making it confusing. So 0 of coverage. Let's add these up and see where Dave ended up. So his covered expenses. So what the insurance company paid for. So $10,000, $35,000, $41,000. So that's pretty good. Like, that's awesome. His insurance company wrote checks for $41,000. Okay. Now, what wasn't covered? So what went above and beyond Dave's expenses? So here, 30, 35, 40, 55, 57,000. 57,000. So you can see there's a significant portion of this accident because Dave went with the bare minimums that isn't going to be covered by insurance. Now, this is an extreme, this is a very serious accident to have these big values in here, but it's definitely not unheard of. These things can easily stretch into hundreds of thousands of dollars. This accident had a total cost of $98,000, 57 of which Dave can be sued for. So they're going to make a claim against him and bring him to court to say, I want this money right here. And it's going to get to be an ugly process for Dave. But at least $41,000 was covered. He's not looking at trying to come up with $98,000. All right. Now let's do this exact same scenario, but one twist. Let's say that Dave wasn't at fault, that the exact opposite happened. It was the clear fault of the Lexus driver, and let's see what happens to Dave's bills when that happens, when he's not at fault. Let me switch back over from a pen. Oh, wait, maybe I don't have to. No, I don't have to. All right. So we have Dave here, still has minimum liability insurance. The crash still happens, but it is clearly the other driver's fault. So when that happens, Dave is not responsible for any damage to persons or properties when he's not at fault. So for example, if you parked your car on the side of the street, like legally parked it, and someone slams into it and they get hurt and their car gets destroyed, your insurance will not pay anything for that. That was their fault, and they have to come up with that money themselves. So Dave does not have to worry about this $40,000 of damage to the vehicle. Dave doesn't have to worry about the medical bills associated with this. He doesn't have to worry about, whoa, where are we? There it is. He doesn't have to worry about this $6,000 of injury here and this $5,000 of injury here. So what we're hoping in this case is that the person driving the Lexus doesn't have minimum insurance, that they have more coverage to help them pay for their own stuff. We'll talk about that in the future. But right now, let's talk about what Dave is experiencing. So because it wasn't his fault, Dave's medical bills are covered up to $25,000. So that means it's $15,000 covered, zero uncovered for his medical bills. Dave's car is covered up to $10,000 at least, because that's the minimum requirement, $2,000, and zero uncovered. So just by not being at fault for the accident, Dave goes from owing $51,000, I think, $57,000, to owing nothing. So that's amazing. And here's even the better news. This $17,000 isn't covered by Dave's insurance. It's covered by the insurance of the Lexus driver. So Dave has no problems except for the fact that he was injured and has to go through the rigmarole of getting a new car. Like there's still a lot of headache of all of that. So you can see here that the message of the story is do not cause accidents, which is kind of obvious, but you can avoid causing accidents if you slow down, right? Drive the speed limit or just a little bit below. You can avoid accidents if you leave a bigger space between you and the car in front of you. If you drive only in safe conditions and you try to limit your driving, you don't drink or use drugs or prescription drugs that might affect your ability to operate a vehicle before operating a vehicle. And what are other big ones? You stay attentive to the road, so no texting and driving. The things that we kind of know are reckless and bad to do. This causing an accident can be a huge hit financially to you and really cause you a decade or more of just constant trouble financially. Now, texting, you can't hide it. So the one thing that they're going to do whenever there's an accident, the insurance companies are going to request to see if there were any texting or data transfers happening during the accident to see if you were watching your phone or if you were driving. So you cannot hide that thing. Do not do it. Guaranteed people will find out if you were texting during an accident or 2 seconds before the accident. And it will look bad for you. It'll push you towards the at fault category, which of course is where things get expensive. All right, so that's enough of me on my soapbox there. The last thing I want to do is talk about what not to do in an accident. So after this little video, you're going to actually take a look at a website that has great information about what you should do if you get into an accident. This is going to be, we'll talk a little bit about what not to do. First of all, when the police show up, always call the police. That's part of the other website, but always call the police. If the police say, hey, if it's a minor accident, do X, Y, and Z, then do that. They may not always come, but if they're not super busy or the traffic's not crazy, they'll show up and do their reporting. But when you do get there, you're talking to the police officers, don't take responsibility for the accident. It's not your job to do that. You might have a completely wrong understanding of what happened. You might say, hey, this was totally my fault, when in fact the other person was texting and it was ended up being their fault. Who knows? Just stay out of that. You will be asked to do a written report of what happened in the accident. When you're doing that, just stick to the facts again. Don't start editorializing saying, oh yeah, I was driving way too fast, or I did this, or I did that, or all this other stuff that would be like, this is my fault kind of thing. If you were speeding, it's okay to say you were speeding. That's just a fact. They're going to be able to figure these things out through eyewitnesses, skid marks, damage to vehicles. There's lots of ways that, lots of techniques they use to be able to recreate what happened in the accident and be able to decide who's at fault in the accident. Okay. And another big thing is do not lie. So I'm not saying, you don't want to be the one determined to be at fault, because it has lots of problems on the other side, depending on your level of insurance. Don't lie. That's a big deal to lie to the police officers when they're doing their reporting. But just stick to the facts. All right. So the rest of this thing is all about you going to that website, reading over what to do in case of an accident, and then your week is done. And next week we're going to pick up and we're going to talk about what are the optional insurances that you can have for car insurance to help protect you from that other $57,000 of uncovered damage and claims against you that you're going to have to pay for. So have a great rest of your week. And we'll see you next week. There will be a live office hours on Friday at noon where you can ask questions. It is not mandatory that you show up, but if you want to come ask a question or just come say hello, feel free. I will be online from noon to 12:30 on Friday, and hopefully every Friday. Thanks. Bye.